Hello friends, welcome to the new session of BFM 10 minutes. Here in 10 minutes we are covering one important topic, only one. Okay? Today's topic is exchange rate mechanism. Exchange rate means we'll be covering what are the various term and spot and all these things. Okay? Plus, if there is a holiday, then what? So that's why only 10 minutes, spare 10 minutes, and you'll get a lot of knowledge on this. Okay, because this question is asked in exam. See, basic rule remember. When the settlement of funds and exchange of currency takes place, means these are the names. See this, TOD or cash. Here we also call it as ready. See this. It is also called as ready. Cash, or some books write it ready also, READY. Cash ready or cash rate or TOD rate. Okay, all the three mean one and the same. So what do you mean by this? It means that, see here, it's very simple transaction. I will give you something, you will give me something. That's the basic meaning of settlement. Means what? Example, let's say, if you go in a vegetable market, okay, in vegetable market, what do? We give money to that vendor and that vendor gives us vegetables. What do you mean by settlement? See, X buyer and seller, right? So buyer will give rupees, and seller will give any commodities. Here, whenever I say vegetables, it means it is a commodity. So any commodity. So now this commodity, if you replace this vegetables with dollar, or if you replace this with gold, if you replace it with the stocks, shares, anything is one and the same. After all, it's a commodity. So buyer will give rupees to the seller and seller will give that commodity. Now when this settlement takes place here, when the settlement is immediate, means I'll give you money, you give me that commodity immediately. Then it's called as cash ready or TOD. Same day, it is also called as ready. Okay. Second, Tom. Next working day. Understand this word working. When you are working, that's called as working day. Means what? Simple example I'll give you. Means suppose if I am having, let's say I am doing the settlement today on Monday. So next working day is Tuesday. So Tom will be Tuesday. Okay. But if now tomorrow is Tuesday and tomorrow is, let's say, holiday, in that case what will happen? Then the Tom will happen on Wednesday. So next working day. So Tom next working day. Okay. Working. So remember, depending on holidays. Okay. Next spot. Second working day. Now look at this. Second working day. Don't get confused between next and second. Okay. Don't get confused. Next means immediately next. Second means day after tomorrow. See here, it means day after tomorrow. Parso. In Hindi we call it parso. Day after tomorrow. Right? So that is second working day. Okay? And any day after this is called as forward. Means if it is second. Now if it is third working day, then it means forward. And third, if it is fourth, then again forward. If it is fifth, then again forward. If it is 1 year, again forward. So any day after the spot is known as forward. Any day after the spot is known as forward. Got it? Everyone clear? Let's take few examples. If next or second working day is a holiday in either of the two countries, then the settlement will take place on the next day. Okay, next day means next to that holiday. So what does it mean? Suppose if I am doing it Monday, transaction on Monday. So settlement is, let's say, Tom. So settlement will be on Tuesday. But what happens? Tuesday is a holiday. Either in any of the countries. Remember, either in any of the countries. It can be on the buyer side also, it can be on the seller side also, both. So settlement will take place on Wednesday. Okay. next working day, next day. Okay. So next day means again here it means next working day, because if in some day sometimes it may happen Tuesday is also holiday, Wednesday is also holiday. Then what? Next working day. Got it? For example, spot deal is stuck on 23rd of December. 25th is the Christmas day and 26th is a Sunday. Under such circumstances, value date of the transaction will be 27th, right? So 23rd I have struck the deal and it is spot. So remember, spot means what? Spot, second working day, 24th, 25th. But 25th is a holiday. So 26th is also a holiday. So 27th. Okay? So this is the meaning of this next working day. Always remember it's working. There are two types of rates. One is fixed and floating. What do you mean by this, fixed and floating? Fixed rate means we fix the country fixes the rate. Means, for example, let's first read this. Floating rates are determined by the market forces of demand and supply. Okay? Bharat means India, but we call it Bharat now. I insist you all call it Bharat now. Don't call our country India, call it Bharat. That's the real name. So Bharat switched to floating exchange rates regime in 1993. So we shifted to in 1993 to floating rate. Now what do you mean by this? Floating. See this, fixed rate and floating rate. It means the dollar rate is fixed. With reference to some, means rupee rate is fixed with reference to the currency. Some currency, anything it can be. Generally it is dollar. Okay. There is one more rate concept, that is direct and indirect. Okay, floating and fixed means that rate is fixed. I will say, like presently you are seeing in USA, the gold rates of their currency just check on Google. They have fixed it to $42. Whereas right now the gold rates are around 2000. Means huge. So there's a difference. Coming back, we switched to this floating exchange rate in 1993. There's one more rate system that's called as direct and indirect. Direct and indirect. Okay, indirect. Okay, direct and indirect. Okay, what is direct and what is indirect? Whenever I say, see this, $1 equals to $1 upon rupees. Whenever this dollar and rupees, whenever dollar is above and rupees below in the denominator, then it's called as direct rate. Or you can say $1 equals to, let's say, rupees 85. So who is floating? This 85 rate is floating. So that is called as direct rate. We are following this rate system. There is another rate system called as indirect. Indirect means what? 1 pound. Pound is generally written like L. Okay, and this is below. So 1 pound equals to, let's say, $1.1. So here who is floating? Here dollar is floating, and pound is fixed. Pound is fixed. Okay, so this is known as indirect rate. We have shifted towards direct rate system since long. Okay, so this was it about exchange rate mechanism. Okay, before going, let me suggest join the new batches which have come in. Immediately join them because they are fresh. They are right at the time of your exam, and you will be able to grasp the complete knowledge. Here today only we are starting it. Tomorrow morning I am starting ABM, so don't miss it. Okay.